Ladies and gentlemen, good afternoon. Thank you very much for this opportunity to talk with you this afternoon, although you've got me worried already. Here's the wine grape industry, and there wasn't a glass of wine at lunch. What are you trying to tell me about your product? It's not to be trusted. What I want to do in the time available is to maybe have a look at the broader issue of the business climate you're operating in, because I'm safer in the broader stuff, because you know much more about your industry than I ever will. But all businesses, small and large, have to operate in this Australian economy, which Joe Hockey actually has something to do with at the moment. So let me just skim through a little bit of what Joe says is happening to the economy you're having to operate in. Anyone who's had a child in the past 3 decades probably would be familiar with the book The Hungry Caterpillar, yeah? You've read it at least 1,000 times, that book. Well, Joe has struck me as in fact being the angry caterpillar. All that time in opposition, being angry. He didn't realise he didn't have to be angry anymore when he won government, but he remained the angry caterpillar. On his own webpage, he keeps a pictorial history of what he's been up to. And on the page for the budget last year, there are all these shots of Joe. And if you look at them, it's all the angry caterpillar. Oh, debt, destruction, doom, Australia's going to hell. Funny thing is, after 18 months in government, he realised he was in government. And a funny thing happened just before this year's budget. Joe, the angry caterpillar, went into his chrysalis and came out on budget night as Joe, the happy budget butterfly. Ooh, don't worry about that deficit and debt. I'm the happy budget butterfly, fluttering around pollinating small businesses all over the country. Here, have a little tax cut. Here, have a little immediate deduction. Isn't that nice? Well, I like to keep an eye on Joe with some third-party approvals. So the Friday before the budget, the Reserve Bank published its quarterly statement on monetary policy. Friday before budget, the Reserve Bank's best guess was the Australian economy was stuck at around 2% growth and would make about 2.25%, 2.5% this financial year, and then creep up a little bit. On budget night, Joe said, no, those worrywarts at the Reserve Bank, they don't know what they're on about. Joe said that economic growth, the big figure, GDP growth, would be 2.75% this year, an improvement on last year. And then it would be 3.25% in 2016-17, which is back to what we used to consider trend growth, and that'd be great, everything's fixed. Yeah, I hope so. Then you got the 2 years further out. The figure there, 3.5% both years, is a fairy story. It is a made-up number, and the Treasury disowns it. On the budget paper number 2, they explain where that figure comes from. Forecasting is a mug's game, as anyone who's ever had to invest in a crop and work out what it's going to pay them years down the track knows. Treasury tries to forecast for 2 years, and they all hate it because they know they can't get it right. No one can. Beyond 2 years, they've got to make a technical assumption. What they do is they say to themselves, what speed would the Australian economy have to grow at if we were to absorb all excess capacity? If we were to get unemployment down to not very much at all and have everything going 100%. And we would have to grow at 3.5%. It doesn't mean we will, it's just what we would have to live in a perfect country. So that figure's a nonsense. Yet all the stuff in the budget about getting back to surplus is all based on that figure, which is pretty funny, really. So how did Joe say everything's going to get right any day now? Well, certainly just before the next election. His first excuse on budget night was, our trading partners are going absolutely fantastically. India's going to be the new China and everything's going to be right again. I wish. I used to have that Goldilocks view that India would be the new China, but I think I've learned a lot more about it since those days. And for various reasons, I don't think it is going to be. There is this fabulously wealthy and important country within India, 300 odd million people, who we are mad if we don't lock into and do everything we can. But there are bigger long-term problems we haven't got time to go into now that make me worry a little bit about it. Australia's trading partners are not the wine industry's trading partners in total. But of course, you recognise already today the importance of China. Australia's total trading partners are in fact travelling at around trend. That's nice. Compared with the rest of the world, which has all sorts of problems, our trading partners have been hanging in there and doing nicely. But what really Hockey is saying about the economy is the elements of growth that are going to get us back to full speed. First of all, household consumption. Meant to go from about 2.75% last financial year to 3% this year to 3.25%. And if you're thinking, well, that's only 0.25%, you know, what? Household consumption is about 60% of the economy, so 0.25% matters a whole pile. There's a little problem with that. That's real household consumption. How can it grow when real wages aren't? When wages are flat, barely keeping up and not keeping up some quarters with inflation, how can we expect people to go out and spend more money all the time? The answer from Treasury is, it's the wealth effect. Because housing prices on the East Coast are going up, we all feel richer. So we're prepared to borrow more, we save less, and we go and spend it having a good time. And that's sort of happening, but you wonder how sustainable it is. The other big ingredient in what's happening is dwelling investment. 6.5% growth in 14-15, they're tipping the same this year, and that appears to be the case. That's working the way it should. The problem with this, for the outlook of the economy, and let's not forget the importance of the domestic market to the wine grape industry, for all that the future is export, the real key figure in that chart is non-mining investment. We all know what's happened to the mining industry. The second phase of the mining boom is over. The non-mining investment figure, according to Joe, 2% growth last year, it will be 4% this year, and then a massive 7.5% next year. I wish. What worries the hell out of the Reserve Bank is that it's just not happening. Glenn Stevens, the governor, gets up on the roof of Martin Place and burns $100 notes on full moons and chants for the animal spirits to get out and into it, because they haven't been. The ABS doesn't collect proper figures on non-mining capex. That chart on the right, the blue bit is the ABS figures. They don't count agriculture. They don't count health and education, where there's a lot of capex. They don't count software, and if software is not part of a modern business's capex, I don't know what is. The Reserve Bank plays around with the numbers and comes up with that blue line on top. As you can see, it turned down. And that's why we had an interest rate cut in February. That's why we had an interest rate cut in May. It wasn't really about the dollar. It was mainly about the Reserve Bank not seeing any outlook, any pickup in non-mining investment. Dwelling units are certainly doing their bit. Through the roof, record high. We are building houses again, and we are renovating the houses we have. And the value of those houses, particularly in Melbourne and mostly Sydney, through the roof. And the investors are doing it. The investors are the ones who are meant to do it. That's, you throw cheap money at Australians for long enough, a whole pile of them will want to go out and buy bricks and mortar. This is how monetary policy works. There is no point leaving money in the bank if you're not getting anything for it, and if it's really cheap to borrow, well, borrow some and do something with it. And the investors have been leading the charge. Except now you've got a Sydney-centric media in Australia who are all saying those investors are evil, nasty people who are forcing first home buyers out of the market. There's a reason why they get so much attention, that particular line. The media is full of broke people who would like to be first home buyers, and they've been forced out of the market. A couple of things, very briefly as an aside. The investor market is very heavily into higher density housing. Makes sense. There are a whole pile of sociological reasons why we are moving more into higher density housing, into units and townhouses. In the last few months, we've tipped the balance in Australia in building approvals. We are now approving more units and townhouses, higher density housing, than traditional Australian housing, than places where you could go and play cricket at the backyard at mum's. In New South Wales, the ratio of higher density to detached housing is running about 3 to 2. In Victoria, it's just over half higher density. Nationally, of course, it's behind. Victoria and South Australia, of course, it's behind. But it's an interesting thing. That's not news itself. But what people don't think through is what it means. You live differently if you live in a unit or a townhouse. You shop differently, you spend differently. You don't have to stay home on the weekend and mow the grass and fix the front gate. You can lock up and go to a winery, to a region, at the drop of a hat. Pascoe's law of space states that stuff expands to fill available space. And in the last 2 weeks, we've just downsized from a big house to a smaller house, and I haven't tried my own death yet, or divorce, but gee, it came close, and they reckon they're all linked, those three. You can't buy any more stuff than you have space to put it in. So people living in units and townhouses tend to buy fewer things and more services and more experiences. That the tourism side of Australia will change and is changing because people live in townhouses and units. People go out more, they spend more in restaurants and cafes, and this helps explain why we have the barista-led economy. All employment growth in Australia for the past decade has just been people making coffee, it seems. A little aside, again, funny thing about the housing market, because it dominates the Australian psyche so much, there is no land available in Sydney, relatively speaking. It's just, this is the supply of land available for sale over months of availability, and as you can see, that green line, nowhere. Adelaide, on the other hand, has lots of it. All those vineyards are ready to be turned into high-rise apartments. No, it just means you're not going to make a lot of money out of your Adelaide housing investment, so you better keep working in the wine industry. With the obvious impact here of what's happened with prices, Sydney through the roof, Adelaide picking up a little bit. What happens there, you do get a degree of arbitrage on housing, a ripple effect. Sydney gets too expensive, people do move out. Melbourne gets too expensive, people do move out. I'm originally from Queensland, ran into a couple of blokes I went to school with recently, both had the same story. They had children living in Sydney in good, well-paid jobs, having a great time, but those children were all going to come back to Brisbane because they didn't like the idea of not being able to afford a dog box. You get the same thing, you will get the same thing to a degree eventually from Melbourne if Melbourne continues to go. But it's not enough to try to build a state on. This is an interesting figure that tells you a lot about South Australia, an interesting chart. There are two particular points of interest, three. Actually, there's a million of them, but let's try to stick to three. First of all, remember the old stuff about the two-speed economy? No, it was always a multi-speed economy, it always is. But the days when Queensland and Western Australia were going to the rest of the country are certainly over. It's time for New South Wales and Victoria to actually shine the most. Two colours on that graph to look at. One is the orange sort of bit, business investment. South Australia has actually had business investment occurring here last year. You don't hear about that, do you? All I hear about South Australia is that you're losing the car industry, so the whole place is cactus. And apparently submarines and canoes are interchangeable. I can't work that out myself. But anyway, yet the reality is a whole pile of stuff keeps happening under the radar. Because the reality is you don't hear about good businesses. In your own industry, I will warrant that there are wine grape growers who are doing very nicely, and you don't hear much about them. Within the industry, you've got a pretty good idea of who they are, but you don't hear about them. They're not the people who are out complaining, saying the industry's in deep shit and it's someone else's fault. Funny that, it's the same all over. The other thing about that graph that's very interesting is the green bit, public demand. Government's impact on the economy. The only two states where government is having a growth impact on their economy are New South Wales and Victoria, where they are investing in infrastructure. Government impact on every other state is going backwards. Nationally, it's flat. You know those claims about Abbott being the infrastructure Prime Minister? There's a technical word for that, bullshit. Commonwealth spending on infrastructure has gone backwards under Abbott and Hockey. And that's a tragedy, an absolute tragedy, because just about every economist in the country has been saying, right up to and including the Governor of the Reserve Bank now, this is a time when Australia could be borrowing extremely cheaply, using the government's rich balance sheet, investing in infrastructure that could give a double-digit rate of return. And then, of course, you can build it and flog the thing and go again. New South Wales is doing that with the WestConnect system in Sydney. The government's building it initially, de-risking it, then flogging it, and then going to use that money to build some more. Sounds simple, doesn't it? But both sides of politics have poisoned the idea of government debt. Both sides are to blame. And they lack the ability to explain to people the difference between good debt and bad debt. Good debt, when you are investing to build something that will make you money, is well worth doing. Bad debt, when you borrow to pay pensions, well, you end up as Greece. But we're not capable of grasping that politically at a federal level. It's a tragedy. Anywho, moving along quickly as I run out of time, there were winners from the budget. There's one. It's me on the beach, because Joe Hockey gave me a $1,000 tax deduction. I'm an unincorporated small business with turnover of less than $2 million. I'm doing very nicely, and Joe's giving me a tax. Isn't that stupid? He's giving me $1,000. Why? Because I'm technically a small business, and a fairly tall business too. And that's a part of the electorate, that the heartland they're really trying to get to. That's bad policy. It's not targeted. It actually makes the tax system one notch more complicated, and it's simply silly. The immediate write-off on cap spending of up to $20,000, as many times as you can find things worth buying for under $20,000, is a sound sort of stimulatory policy. It's a pull-forward policy, though. You know, if you're buying something you don't need, you're stupid, and no business can afford that. So you're buying things that you probably want to buy and you would buy eventually, but it's going to pull them forward. And that works for a little while. So it's not a bad idea, but I don't think it's going to solve the world's problems. However, the whole pitch of the small business package is that there's going to be a trickle-down effect like we've never seen before. It's massive. And it's the happy budget butterfly pollinating small business all over the country will get the economy back up to speed. I wish. Just another couple of things about the budget before I leave it. A little hard fact that just cuts through some of the things politicians tell you. Stephen Koukoulas was quick on this. Kook's a bit bitter about these things because he was an advisor to Julia Gillard on economics, just pointing out that as a percentage of GDP, yep, there's a lot more debt now, and there will be, than there was. That, you know, if you had the sort of revenue Hockey's projecting, there wouldn't have been deficits in those years. And this little screenshot was taken from the front page of the AFR the day after the budget, just showing that, yes, indeed, we do have a high-taxing, high-spending budget. Government. The thing about it is, you know, there's the old saying, management is doing things right. Leadership is doing the right things. The budget is sort of trying to do things right, but it's not about doing the right things. There's no leadership in there. There's no solving of the things we need to get moving to really carry on. And that's the question, that same question that you need to be asking about your industry. Are you managing or are you leading in your own business, in your own region, in your own industry? Because if you're managing, you're actually going nowhere. If you're not leading, you're going backwards. But the budget, look, it really doesn't matter so much because of this.
Dans un camion de livraison. j'ai atterri ici. Oh, c'est incroyable. Hein? T'entends ça, chérie?
Ben oui, c'est fou.
And that's what the happy butterfly's done. The great story is working to a degree, not everywhere, but to a degree. And that's a pleasant change after 18 months of government that was still talking the economy down. Because we've lost perspective about where we are and what we do in all sorts of ways. The last couple of bars on this chart, as already explained, are wrong. We won't do 3.5. We might be lucky to do 3, but it'll still be growth. We're in our 25th year of growth as an economy. That doesn't happen. If I'd stood up in front of an audience in 1991 and said Australia's about to have at least 2 decades of unbroken growth, men in white coats would have taken me away. There's every opportunity and every chance that we could well go 3 decades. We are the world's champions at economic growth among developed countries. So we're feeling good about it? No, we're whinging. God, we love a whinge in this country, don't we? We're the country, when we won silver medals at the London Olympics. Oh, that's no good, that's shit, you don't want silver. Ugh. We have become that spoilt because it's so long since times were genuinely hard. We've got a generation of management. The last time things were genuinely hard in this country, the only thing they were managing was maybe their lunch money. Quick Trivial Pursuit question. I love to ask. What was the headline home loan variable interest rate when Wayne Swan stood up to deliver his first budget in May 2008? I got a 7, and we give a 7, and we get an 8. If this was Sydney, you'd all be going, oh, it's an auction, I'll bid. I normally sort of get an 8. Try 9.45%. It went up the next month to 9.6%, and everyone's forgotten. Everyone's forgotten that the Reserve Bank was belting the economy over the head with its blunt instrument to stop it. Because unemployment was down to 4.2% and falling. 4.2% unemployment means anyone who wants a job can get one. Some people who don't want jobs have them. We've all had to work with those people from time to time. And that was causing inflation to be outside the comfort zone. It was 4.1% and rising. Everyone's forgotten. Everyone's got this rosy view, this nostalgia that, oh, we just need to get the economy back the way it was before the GFC, and that's right, that's the way it should be. No, it was an unsustainable bubble, just like the boom period in the wine grape industry. Everyone remembers the very best season and think, that's normal, that's what we should be doing. Yeah, what's wrong that we haven't got that all the time? When the reality is that was unsustainable and that had within it the seeds of its own destruction. I don't know of any product that when it's going well, certainly of any commodity that when it has a good price, that doesn't attract a whole pile of production that does what production will do. It is the only thing you can rely on in any commodity market. Whether it's iron ore in the Pilbara or milk, as the Kiwis are finding out now. Actually, if they get rid of all their dairy cows, does that mean they can have more Sauv Blanc? I don't know. And it's the same with wine grapes. So when I listen to what has been said here already today, it annoyed me to a large extent because someone else has already said all the things I really wanted to say. But I also thought, this has been said for years. The idea that this is the new normal, no, this is the normal. If there's a buck to be made out of growing something, people will grow it. And the people who are good will have a good business at it. I look back on a pretty long career, and of the time I spent at Channel 9, I was on Business Sunday from start up for 16 years. And one of the stories that I look back on Business Sunday that I was actually proud of doing, I thought, we achieved something, came out of figures from an ABARE Outlook conference in 1995 in Canberra, where I got hold of some great research ABARE did on broadacre farming in Eastern Australia. And what they found basically was in broadacre farming on the East Coast, the top 25% of farms were good businesses. They were sound businesses. The bottom 25% that got a whole pile of attention, actually, don't worry about them because they're basically hobby farms, more or less. They had off-farm income, otherwise they wouldn't survive. The problem was really the 50% in the middle, the typical East Coast family farm. They were the ones in really deep trouble that had to get bigger or better or smarter or were facing wipeout. And we did a documentary built around that with a case example around Hay Springs and all sorts of stuff. But the lessons of that 20-year-old documentary apply today everywhere. You've got to be better. Not everyone can succeed. Funnily enough, that's the way capitalism is. And if you're not getting better at what you're doing, you are in the process of going out backwards. Because there is always a better way to do it. There is always a more productive way, a more creative way, a more fun way, a sexier way of doing anything. You can always get ahead a half an inch. Find out better than the bloke next door what the customer wants. Maybe get ahead of the trend a little bit instead of playing catch up. But inertia is a powerful force. Inertia is a very powerful force in agriculture. This is a family business. We've always done this. We've always grown this grape in this way. Yeah, good luck with that. Quickly, a couple of things. You've already seen a version of this graph with Mark. The bit on the right, everyone knows about the record debt. The bit on the right, people don't see. That we're actually not spending that much on servicing that debt. A bit different if you're a first home buyer, but it means Australians do have money to spend and they'll spend it when they see value. You hear lots of myths about the consumer being on strike. No, the consumer is not on strike. Our retail sales aren't going backwards, they're not going up strongly, but they're still growing. And if you ask yourself, what are the three biggest spends in anyone's life? Housing, a motor vehicle, international travel. Australians are spending at record levels on all three. The opportunity for the wine industry in the domestic market is to tap into that greater wealth and that greater discretionary spend. We are spending more in restaurants and cafes and takeaways. We're not spending any more in department stores. They tend to be dinosaurs. And aren't I sick of hearing about Myer? God, Myer, anyone would think it's an important company instead of a little fading enterprise. Why do you get so much coverage of Myer? I'm a journalist, I know. Supermodels. If I had to do a story on retailing, I would like to work with Jennifer Hawkins if I possibly could. Those people at Bunnings are nice, but no. Look quickly. A couple of things about politics clouding people's opinions. Each month you get the Westpac Melbourne Institute survey of consumer opinion come out, and it gets, headlines. You have to get the full report to get this particular breakdown, which is a breakdown by voter attention. If you can make out the colours, the blue line, which is at the bottom for most of it, but soared on the election, coalition voters, the black line, Labor voters. It's normal, whichever mob's in, the other mob supporters think they'd be better off if their mob was in. What became abnormal was the gap that opened up between the two. Reached a record difference in the month that the carbon tax was introduced because the blue line people thought the sky was about to fall. Blue line people, of course, had confidence soar as we went into the election. This survey was updated on Tuesday. Both coalition voters and Labor voters took another leg down. Labor voters actually think that Abbott and Hockey are worse for their personal economic outlook than the GFC. Coalition voters have been losing faith in Hockey. I actually think it's very sad that people can let what politicians say influence their own prospects, their own belief in their economic prospects. The reality is there's not much difference between the two of them. We're very fortunate in this country there's not much difference between the two of them. We've still got the same Reserve Bank. We've still got much the same Treasury. And the things they disagree so loudly on aren't that big in the scheme of things compared with the fundamental opportunities that we've got. The good news is there's actually very little correlation anymore between what consumers say and what they do. There is a lot of correlation still between what businesses say and what they do. And this is the best news, folks, in business this year. The Wednesday release of the latest NAB business confidence survey showed an uptick. Business confidence is back to where it was pretty much at the time of the election. They lost all the confidence, now it's picked up. I don't think it's the budget as such. I think it's business just saying, you know what, it doesn't matter, bugger the government, let's get on with it. And that's a very positive thing, because the reality is that necessity is the mother of productivity. And the odd dodgy graph, because I'm not very good at PowerPoint. Restructuring happens, and it's happening in every industry. You are not alone. You have company in the rest of the country. And it's one of the great untold stories is that necessity makes us do it, and we actually do it well. It doesn't fit the political agenda to say labour productivity in this country this decade is the best it's been since the 1990s. You can play with these figures all you like by selecting different time periods. The Treasury Secretary did it last week to talk down labour productivity. The reality is it's not as good as it was in the 1990s, and there are a whole pile of reasons behind that, but labour productivity has picked up no end. Because good management and good businesses and good workforces understand the reality of what we're in now, a hyper-competitive economy. It's not so much a matter of what cycle we're in, where we are in the cycle, it's the nature of business. It has never been more competitive to be in any business than it is today. The real power of the internet isn't the ability to go online and buy a shirt from the USA. It means that your customer, your consumer, your end customer is totally informed. You can't fool anyone for any period of time. There's so much disclosure and look-through. When Sandy had that wonderful quote, that wonderful figure, that the retail margin 40% now, it reminded me I did an interview with Fletcher, the failed CEO of Coles, Myer at the time. He was new in the job, and after we did the interview, we're having a bit of a chat when they take the two shots, and he just sort of said to me, you know, two Australian beer companies have the second highest profit margin in the world. We're going to get a hunk of that. When everything is transparent, you lose pricing power awfully quickly, unless you can be better. Unless you can find that niche, unless you can find that edge, that attractiveness, that productivity, unless you're better than the rest of the industry. And the good news is, we are good at it. You're good at it. Things aren't as easy as they were when prices were high. But a funny thing, looking at the charts of vineyard prices, I was thinking, hang on, people are telling me this industry's doing it really tough and hard. Most of the trends were heading upwards. How come? Why are people paying more per hectare if the industry's doomed? There's a lot of emotion attached in growing grapes. That would explain part of it, but also speaks about a degree of optimism and a belief by people that they can do it well. And we underestimate the things we're good at and we don't hear the good stories. For example, everyone knows the price of bloody iron ore, it's down. No one ever sees this. We are now making more as a country out of exporting services than we do out of exporting iron ore. Service, that depends a bit on what the price of iron ore is month to month. This month, we're making more. We make more out of exporting services now than we do out of exporting coal and LNG combined. And look at the way that graph was going up when the Australian dollar was above 1 US. What are we capable of with it down below 75 again? Much of that, of our services, the two big items in our services exports are education and tourism, which are also related. Remember the myth about tourists wouldn't come to this country because we had a strong dollar? No, they kept coming when we had a strong dollar. Now that it's weaker, I don't know that numbers will grow any faster, but I think they'll spend more. The opportunity is to spend more. And the lesson of change, of restructuring, tourism's a good example. These are this is the latest month. Months jump around a little bit. New Zealand is always put down as our biggest source of international visitors. It's not true. You know, you can't call that international travel, visiting the brothers across the Dutch Or actually, a lot of that is winemakers visiting the ATO to pick up their cheques. The real figure there is China. Look at the growth in Chinese tourism, 23%. Varies month to month, sometimes it's 20, sometimes it's 25. And it's early days, really early days. What do we do best? We teach lifestyle. And there are a whole pile of people who need to be taught lifestyle. Your industry is as much about lifestyle as anything else. Very quickly, the key reason why I'm an optimistic skeptic is in this figure. Most people still think we've got a population of 22 million, maybe 23. It's closer to 24 million. The rate of growth has slowed down a bit to 1.4%. South Australia, it's just under 1%. What does that mean? Population growth of about 1.5%. It means in 6 years you have 10% more people. In 6 years there are going to be another 2.3 million odd Australians. An extra 2.3 million people wanting shoes and socks and schools and roads and wine and whatever. How good is it to be in business in a country where if you do nothing, your domestic market is going to grow by 10% in 6 years? Imagine how tragic it must be to be in domestic business in Japan, where every year your market goes backwards. There's going to be 30 odd million fewer Japanese in 25 years' time. They've got a population problem, we don't. We do have a tax problem, it's coming up. The dependency ratio is 4.7 now, it will be 2.7 in 40 years. That means we will have to have tax reform. We have to tax smarter, we have to tax more efficiently, and we'll have to tax a little bit more. Sorry, Gen Y, we baby boomers are going to live forever. And we like gold-plated Zimmer frames with V8 engines. And I think some places will force that tax change. I think because we have a total lack of leadership as far as I can see on both sides of politics, we'll probably need a crisis to get us going on the change. And that will be forced on us by demographics. The Australian example is pretty well known. You have that bulge of boomers and the echo of the boomers coming through. South Australia, you barely have a bulge, it's more like tram tracks. This state has medium-term fiscal problems. It means if you are looking to your state government to help you, good luck. The reality is South Australia, I think, will be at the forefront of reform because of necessity. A final thing, because I'm out of time, some late-breaking news from the Onion News Network.
A report from the Department of Labor finds an increasing number of American workers are outsourcing their jobs. For more on this crucial issue, let's go to Joshua Russell in the Money Room.
Thanks, Brendan. For years, corporations have been outsourcing their labor to developing nations as a way to cut costs. But recently, many individual employees have been sending their own work overseas.
I take the money that I would have spent on coffee and pay someone in India to do my job for me. It's allowed me to unleash my full potential.
Philadelphia accountant Donald Felton outsources the majority of his daily workload to Jahanara Kashem, an accountant based in Bangalore, India.
I get my assignment from my supervisor and I send it off to Jahanara. Sometimes I'll look at it when it's done, but usually everything's right.
Mr. Kashem says he's extremely happy with the 68 cents an hour Donald pays him.
I'm able to feed my family, and Mr. Felton can devote more time to his fantasy football team.
And Donald is just one of the close to 700,000 workers who've come to rely on overseas labor.
I've actually gotten 2 raises since Jahanara started. He's really good at doing my work.
But it's not just lower-level employees who have embraced the trend. At Donald's firm, many senior-level managers are now outsourcing their jobs as well. Workers representing the company's executive officers meet via conference call every Friday.
That is totally
I don't think
unprofessional.
Mr. Richmond will agree with those cuts. He feels very strongly we need the consulting
We need
division.
paradigm-shifting solutions.
Some overseas workers have done so well, they've been able to outsource their own outsourced work to those even poorer than themselves.
I pay a starving manager accountant one handful of rice per day to fill out the expense reports that are sent to me from the U.S.
Analysts predict that if the trend continues by 2025, the world's poorest man, Ahmed Khalili of Afghanistan, will be doing 83% of the globe's work. It's a scenario that would suit Donald Felton just fine.
I'm trying to get to a point where I can just lay in one place and not have to do anything ever.
With the Onion News Network, I'm Joshua Russell.
Thanks, Joshua. Personal outsourcing is expected to grow as much as 20% over the next 5 years, according to the Filipino team that completed the Department of Labor's report.
That is satire. You can't go back to your office and arrange it, but like all good satire, there's a large element of truth to it. There is only one workforce. It's global. There is only one market. It's global. And like everything I've tried to say, other speakers have already said it. When you're talking about a grape variety and you're in Chile's market, when they're in your market, your workforce, their workforce, your end customer in China, it is all one market and it's one workforce. Riding this wave of globalisation has served us extremely well, and there's no choice. If you don't ride it, you're going to get drowned by it. So there's no point whinging about those bloody Kiwis. You just got to beat them. We're playing South Africa tomorrow night in a rugby union test. We've got a better chance there. But anyway, the point is that tidal wave, that tsunami of globalisation is changing our world in more ways than we have time to consider. The key driver in it, though, one of the few genuine insights I think I've been given, was that the most powerful economic driver on earth is a mother's desire to see her child have a better chance in life than she has. And that driver has been unleashed for a couple of billion people to our north. Once you unleash it, it's too powerful a force to close that door on again. You still get booms and busts and stupidities and whatever, but that fundamental drive is there. That's what you're part of. That's what our economy is all about. It's globalisation that is lifting billions of people to a higher standard of living, where they will want to enjoy a good glass of Shiraz with their dinner. Isn't that nice? Please save them. Don't let them start drinking Kiwi Pinot Noir. Red wine is much better. Thank you.